All right. Good morning, everybody. This is Brian Lysing with Financial Brokerage, or good afternoon to some of you at this point in time. Um, you are joining the webinar on the life insurance allocation tool today. For those who might not be familiar with Financial Brokerage, we are a national marketing organization working with independent agents and advisors all across the country. Areas of life insurance, annuities, long-term care, disability, income insurance, critical illness, and Medicare supplements and annuities. I forget if I said that. But at any rate, I'm one of our life insurance specialists here at Financial Brokerage. Spent a few years out in the field actively selling just about everything from securities down to renters policies and a whole lot of life insurance in between, and have been advising advisors and agents just like you for several years now. Today's webinar won't take too long. I don't have any slides. I'm going to walk you through a very unique tool that we have available on our website that you can see right in front of you, financial-brokerage.com. This is what we call our life insurance allocation tool. For those of you familiar with securities products or who dealt with mutual funds or variable annuities, variable life in the past, you may be familiar with a asset allocation questionnaire. I remember I had those that I would use with my clients to determine their risk tolerance level for those sorts of products. Well, we've come up with a tool that can do the same thing, but it applies the same sort of lines of questioning to determining how much life insurance and what kind of life insurance a person should have, their life insurance allocations. And so I want to walk you through where to find that on our website and give you an idea what it looks like and how to utilize it here. So I'm going to jump into that in just a second. I don't want to forget to thank everybody for taking a few minutes out of your day to join us here. And if you have questions, we've muted all the lines, but you can still type them, and I'll get to those at the conclusion of the webinar. You can do that in the control screen you see on your right. So up in front of us, we have our website, Financial-Brokerage, the life allocation tool. It's under the quotes drop-down menu. So hopefully that's popping up on your screens right there. If you click on quotes, okay, click on all quotes. Eventually, you're going to see a whole bunch of different quoting engines out there. I've done a webinar. You can find it archived on our YouTube channel on this engine right here, the term and UL quotes, with or without needs analysis. That has been recently upgraded. So if you're not familiar with that, you can go watch that video. But today, we want to go to the bottom here, this term/permanent allocation with needs analysis. And you'll see the different sections. Move on over here. Now, this is something that is designed to be either be used with your clients online on a computer, if that's how you present to folks, or if you scroll to the very bottom, we'll get there. We do have a PDF version of this, which you could save to your desktop, you could email to somebody, or you could print it off and do it by paper. The computerized version will score everything for you automatically, but we're dealing with small numbers here, so you can easily score this quiz by hand. Absolutely no problem. I think my fifth grader could do it. So we've got this divided up into three main parts. And for section one, it's where we really need to start, because we don't know how much should be term, how much should be permanent, if we don't know how much a person should have in the first place. So you can get to these numbers from other resources. Everyone has their own needs analysis that they like to use. This is one that we happen to put out there. Again, you can use a different one if you want to. But this one is very, very simple. It does not take into account fixed needs like paying off a mortgage or maybe even a college education. So it's a little bit limited. But in this case, it does take into account monthly income. So I'm going to plug in some numbers here. Let's say we've got a family, and I don't know, their monthly income is, let's just use some round numbers here. Let's say their bringing in $10,000 a month. How much would they like to provide for their family in the event something happens to them? The old rule of thumb I was told, if you have a family with children in the household, you want to use the client's numbers, but if they're not sure, that's a good starting point right there. How many years do we need to provide that? I'd look at the age of their children and ask when they think they're going to be out of the house, or look at the years between now and their planned retirement date. And those are the numbers you want to use. You might need two different numbers, right? You might need one income level for a certain period of time and another income level for another period of time. But you can just run it twice if that's the case. But I'm going to keep things easy and say we want to provide that for 20 years right now. So if we do that, we can go, let's see here. I can move things around so I can see what I'm doing. Okay, we need to go next and look at the chart here. So we said 10,000 a month for 20 years. We need 70% of that. So we really need 7,000 a month for 20 years. And we can look at this chart right here, and it's going to tell us we need 1.155 million. So I'm going to plug that in right here. 1,155,153. Current life insurance coverage. We're going to assume this family doesn't have any right now. Least important part of this tool, you can come up with these numbers from other resources. The really unique part now is this second part here, the life insurance portfolio allocation tool. So this is going to help you determine, based on this number, well, how much of that's term and how much of that should be permanent. It mentioned in some of the ads for this webinar that this tool is going to help you increase your closing ratios, help you increase your commissions, and this is how we're going to do it. We're using the client's information here, right? We're not coming up to them and saying, hey, based on my recommendations, I think you should have half of this is permanent and half of this is term, and here's why. They may or may not believe you. They don't know how you came up with that recommendation, right? They may or may not trust your experience in that area. But if we can use this questionnaire, now it's not your idea, it's their idea. And people tend to take action much more readily if they think that they came up with the idea themselves. So that's what we want to do. We want them to come up with this all on their own. So we're going to take them through this little quiz here. There aren't very many questions at all. As you can see, the scoring here on the right, I mean, you could easily do this by hand and come up with the point system there. So I'm just going to, I think, randomly mark some answers here. Idea of leaving an inheritance. Let's say these people don't care. Adult children may rely on me for financial support. No, we don't care about that for this person. For the least expensive type, even though benefits may expire. Maybe our person says, wait a minute, what about benefits expiring? I don't want my benefits to expire. Okay, we'll say we disagree with that. Life insurance for a limited period of time, maybe they're looking beyond that, right? If I die prior to my spouse, sure, they receive a death benefit. Yes. I were to die during my working years, I want my family to receive a death benefit that would replace my income. Yeah. Important me to have life insurance in place when I die. Let's say it's important to them. I don't want to commit to permanent today, but I want the right to convert. Let's see what happens if we mark disagree on. Well, let's mark agree, saying that they don't want to commit to permanent insurance. So in that case, we've got 4 points. And all we have to do is look over here. And based on these answers, we should have a 50-50 blend, right? What if we change one of these answers here? We'll disagree, and the person isn't uh, so dead set against having something permanent. It doesn't change the point total that much. We're still in the 5-point range, so 50-50. This gives you a good starting point to use with your clients. You don't ultimately have to go with a 50-50 blend of term and a permanent insurance, but it gives you a starting point for that conversation. And this is really going to give you a chance at increasing those commissions overall, because permanent plans cost more than term, at least initially. If you look at it over decades and decades and keep buying term, yeah, you're going to pay more if all you ever do is buy term. But the initial premiums are going to be a little higher for permanent, and that means more money in your pocket. You have to do about the same amount of effort anyway, right? So why not at least bring this up with your clients? So now that we've determined, in this case, a 50-50 blend is optimal for this client, well, what kind of permanent insurance do we want to look at? There's lots of different kinds of permanent insurance. In fact, if you peruse through our YouTube channel there, I've got a little 2 or 3 minute video on the different types of permanent insurance that are out there and how they all relate to one another. So this allocation tool will help your clients determine what's right for them. Is it a final expense plan, a traditional whole life? Is it an IUL, a GUL, a current assumption UL, an IUL with a guarantee? We did leave off variable universal life. According to statistics, not many people are buying that these days. And on top of that, we don't deal with securities products here. So that was off the table. Anyway, so if you're securities licensed, you might want to find a way to bring that back in some fashion, but we're not able to off of this engine right here. So this will be very similar to the previous scoring quiz that we were looking at. We'll just kind of go through it here. Client says, I prefer the guarantee of knowing what my policy will be and what the death benefit will be. Let's say we agree. We don't want any surprises like we see with health insurance or long-term care insurance down the road. Like flexibility increase or decrease. Who wouldn't want that, right? I like my policy cash value to grow, eventually be worth more. Let's say the person would like that. Find additional ways to save money on a tax-deferred basis. Let's say the client's very interested in that. For a type of policy that has cash value, I'd like to know value is guaranteed. Let's say they're unsure about that. For a type of policy that has cash value, willing to accept some risk for more policy cash value. Let's say they're going to disagree on that. So in this case, we have 68 total points. Let's see where that puts us here. So it kind of puts us towards the high end. Says this client prefers a policy with potential for cash growth, but might be unsure about taking risks. So maybe this person wants a whole life or index UL. I would also say maybe an index UL with a guarantee built into it, an optional guarantee, or maybe a blend of those. Right. So now you can launch into those conversations with your clients. Some of the other answers here you'll see. We might have some policies that are completely guaranteed and take absolutely no risk at all, and cash value isn't even an option, right? If I would have disagreed with some of those statements rather than agreeing with them, we'd have a lower point total over there. But this can, again, help steer you towards the kind of conversation that your client is interested in having, right? You don't want to bring up index UL with the person who either doesn't have the money to overfund it or doesn't care about cash growth, or maybe they have other tax-free resources that they want to use. And conversely, if you have a person interested in tax-free accumulation and distribution, they don't care about a GUL that has no cash value at all. So again, this will help steer you in the right direction. The questions are all right there for you to use. I'd mentioned that at the bottom of this, we do have a way for you to access a PDF. So here it is right here. Click here to download the PDF version. And we're going to see the same thing. Again, that you could email. Now, I guess our financial brokerage information is on there. You might not want to email it to a client, but you could certainly print this off and use it. Again, calculations are easy enough to do by hand, right? You can score them right here. You probably don't even need a calculator to do that. Again, pretty simple, and this is unique too. I don't know of another marketing company that has a life insurance allocation tool that you can use with your clients. So that's something very unique that we can bring to the table here for you at Financial Brokerage. So that is, really the end of the presentation. I'll open it up for questions here, and you can find this right on our website. Once you log in, you'll be able to get there, and you can use it today. So I want to thank everybody for joining us today, and we'll get into the questions here.